Hi, this is Manoj Agrawal. Today we are doing an interview with Amee Parbhoo. She's a managing partner at Accion Venture Labs, which is a part of the Accion Group. So welcome, Amee, to Banking Frontiers and to this discussion.
Thank you. It's great to be here. Thanks for having me, Manoj.
Sure. Amee, can you give a little background about yourself and your organization?
Yeah, absolutely. Happy to. I'm Amee Parbhoo. I've been with Accion Venture Lab for almost 8 years now. As you mentioned, we are part of Accion International, which has been working in financial inclusion around the world for over 60 years. So we all believe at Accion that financial services are a critical element of making sure that people can have economic prosperity. And so we really focus on this, the 2 billion, the 3 billion underserved individuals around the world who don't have access to financial services. At Accion Venture Lab, we specifically work toward that mission by investing in and supporting early stage fintech companies. So we have been investing for over 10 years now, made over 60 investments in startups that operate now in 39 countries, bringing financial services to consumers and small businesses around the world.
In which countries did Accion Venture Lab start its activities in? And which countries are you looking forward to get into?
Yeah.
And maybe you can talk about continents also, if not just countries.
Of course. Yeah. I mean, we invest and are fairly evenly split in terms of our portfolio across Southeast Asia, Africa, Latin America, and a little bit in the United States. So again, truly a global fund. The markets that we invest in predominantly are what you would expect, the ones with large addressable markets, a strong entrepreneurial ecosystem, a strong regulatory environment. So countries like Indonesia, India, Kenya, Nigeria, Mexico, Brazil, United States. These are the ones where the majority of our portfolio is based. But we are increasingly looking at other markets. So we remain opportunistic in other places. So we've made a number of investments in Colombia, in Pakistan, in the Philippines, in South Africa, in other markets. And I think, in the new year, those new markets are ones we're really excited to explore more. So we've been spending a lot of time over the last year understanding Bangladesh, what's happening there, what the entrepreneurs are working on, and excited about the new innovations we're seeing come there. We have a few companies that are exploring Vietnam for expansion, and we're excited to learn more about a massive market with huge needs. And similarly, Pakistan, we've made a few investments and expect to do more there as well.
You mentioned in your introduction that the focus is on fintechs. Now, fintechs are in a variety of spaces. Are you focused mainly on credit or some other areas as well?
We're open across, so really across the full range of financial services. We've made a number of investments in insurtech, in payments, in savings. Obviously, credit is a big part of our portfolio, but that comes in many different forms. So we have, direct lenders serving consumers and small businesses, companies like SmartCoin in India, which is a consumer lender reaching blue collar employees around the country. But we've also invested in companies like Toffee, which is doing insurance, microinsurance for for underserved consumers. But I think, of course, credit is the biggest need when you talk about small businesses who are looking to build or to grow, or for consumers to be able to meet the needs they have. So that can always be a big part of our portfolio.
So what is your modus operandi when you venture into a new country? And how do you acquire that region-specific or country-specific know-how?
While we are a global fund, we have local teams. So for each region we operate in, we have a principal, a lead who works in that region. So someone who's based in Manila, leading our work in Southeast Asia, someone in India, someone in Nairobi, someone who leads our work spending time in Mexico. So having that local presence is just as important to us as having the global knowledge and ability to share learnings from across regions. But when we're looking at a new market, and I'll give you an example, Egypt is a market that we started exploring more almost 4 years ago. And the first year was getting to know a lot of players, spending time on the ground, understanding the regulatory environment, not rushing into making investments, but saying, how do we make sure we fully understand the dynamics and who the right people are in this market? And then as we started to see interesting investments, that's when we would explore them, but alongside local investors. So whether it's an angel or a local fund, we want to invest alongside someone who's on the ground and has that knowledge, complementing our global fintech expertise. And then from there, we start to build our portfolio. So it's not overnight that we explore a new country. We do this very intentionally, very deliberately, because we want to be the best support for the companies we invest in. And just flying into a country we know nothing about doesn't help the company we invest in either.
So what's the typical gestation period before you actually start investing? So how long does it on an average take for you to be confident that you understand the markets and the ecosystem?
It can vary. There's no specific time that we need and we say, okay, it's been a year, now we can invest in a country. It may come sooner, again, based on the partners we know on the ground and the entrepreneurs that we meet. But again, it won't be overnight that we invest in a new market. Once we get to know a founder and a company and a model, we can move fairly quickly. So from the first time we meet a founder to investment, it can be 6 to 8 weeks to make a decision on an investment. So we can move quickly once we get that comfort.
Okay. Among the parameters that you look at to understand the local markets, one of the parameters that I thought maybe we can discuss is the governance in that country, how stable the government structure is. Because increasingly we are seeing a few countries where there's been a lot of uprisings against governments, or the governments tend to be unstable. Do those things factor in your decision to invest?
Absolutely. It has to, as fintech investors, fintech is one of the financial services, one of the most regulated spaces. So we have to have comfort around the stability of government, of regulation, of policy there. I mean, we have seen increasingly governments move toward very friendly digital banking, digital finance regulations, and that's a positive in our book. But the macro environment more broadly is something we absolutely consider when we're looking at a new market. Absolutely, especially the lenders, as you've mentioned, who are looking to raise capital to lend on to small businesses. It's a discussion we have with our portfolio companies every day around how they manage that.
When it comes to fintechs, there's always this thing about valuations versus cash flow and profits. And some fintechs have a very long-term vision and are not really looking to be cash positive in the near future. What is Accion Venture Lab's approach to this kind of dilemma? Quick profitability versus some kind of sustained build-up?
Yeah, it's a good question. I think something that's on every venture investor's mind these days. We've come off of, a few years of very high valuations, a lot of sort of growth at all costs. So, having this that, okay, we can keep spending, and we know more capital will come, and that's drying up now. It's becoming a lot harder, particularly at the later stages, to rely on more and more capital that you're able to raise. So while no one is expecting in the tech space that you're going to be profitable overnight, having that clear roadmap of how you will get to profitability, how you're emphasizing, your unit economics, positive unit economics, and driving toward that, having clear goals is something we're spending a lot of time on. And thankfully, especially over the last year or two, we at Venture Lab have always prioritized this, but especially prioritized companies that are thinking about profitability and a drive towards sustainable growth rather than growth at all costs. So, it's something we're seeing now more of the venture investors focus on. I actually wrote a paper a few years ago around ways in which we're seeing companies drive towards sustainable growth, not by just putting more and more money into acquiring new customers, which is expensive, but in ways that you can retain your existing customers and grow with your existing customers. And so there are lots of exciting strategies we think fintech companies can take more and more to drive retention, lower churn, and increase your profitability versus more unsustainable growth. Yeah.
And in terms of your expertise, apart from putting capital or funds into these fintechs, in what areas do you see as the expertise at AVL to advise them on business models, technologies, transformations, partnerships, any of those kind of things? What is the strength?
Yeah, I mean, I think we're a really unique partner to our portfolio companies for a few different reasons. I mean, first of all, we are a global fund. So the ability to say to an Indian fintech company, yeah, we've seen what you're trying to build. Here's an example in Mexico with clear comps, clear stats. Here's what we've learned of this model from Mexico or Indonesia or South Africa. I think that brings some real value to companies, as they build and grow. We actually just had our CEO forum where we got 50 CEOs together, and just to see the conversations that were happening between entrepreneurs from all over the world who are saying, wow, I mean, we're dealing with the same challenges. We're trying to figure out the same thing, I think is the real power of our portfolio. But the other piece of it is the sector focus. We know fintech. We understand financial services and technology. We've seen these models. We evaluate, over 600 companies just in fintech every year. So this is the space we know and can bring that, sector expertise. And then the last thing I'd say is our model is unique in that we don't just add the capital and provide capital to companies. We actually have within our team effectively an in-house consulting team that works with our companies post-investment. So all of those global learnings, all of that fintech expertise, we actually provide that support and advice. And our team spends a few weeks on the ground with our companies, helping them on very specific issues that might be dealing with. It might be, a new product that they're developing, or go to market for, a certain customer segment, or pricing. We have, again, the knowledge and the resources to help those companies come to very tactical recommendations on the challenges they're facing.
Is this consultancy part of the investment, or does it come as a separate add-on service?
Yeah, it's part of our investment, very embedded into what we offer, no extra cost to our companies.
Okay. Is there some kind of minimum percentage or upper percentage that typically you prefer to invest in a fintech?
Yeah, I mean, we want to be a substantial kind of minority investor in a company. So, minimum of 5%, but I'd say more on average around 10, 12% is what we see in our companies.
From this perspective, what has your learning about these fintech entrepreneurs in terms of having the right kind of agility, not too agile, not too slow?
Yeah.
Have you learned something about them?
Yeah, it's a tough balance. And I think especially in a market like what we're dealing with right now, where money is tight, the temptation is there to say, let me just respond to what an investor wants. Let me change my business so that I get, investment. And that's not the right path, of course. So, the best entrepreneurs in our portfolio are the ones who start from a problem and a customer first. And they really understand, okay, here's the market need. Here's the customer need. And then you can adapt to, and you have to adapt. I mean, especially we invest typically at a seed stage. Companies at that stage are still sort of figuring out what the business model is and what will scale. But as long as they keep that problem and that customer center, it will be incremental changes. It'll be changes that still address the core of what you're trying to do as a business. I think once you lose that and sort of lose that focus, it becomes a little bit too much and too confusing. I think as companies scale and get to Series A in particular, we all want to see that they know the core, they know what's working, there's product market fit, and now it's about how do you scale that and grow it. So it's not, you can't be experimenting and adapting, as you grow and scale.
Okay. So another add-on question to this is that this whole fintech field is so dynamic, and so you come with a whole lot of organization knowledge, right? Now, between that knowledge and innovation that is happening, something truly innovative, which is outside your existing framework of understanding, how do you deal with that kind of innovation, uncertainty, or whatever you call it, as a business?
Yeah, it's a good question. I mean, just as an example, one thing we're seeing in the fintech space, particularly with the rise of embedded finance, is a lot of what we are calling kind of the verticalization of fintech. So solutions that sort of fit within a specific sector. So whether it's health and fintech, or agriculture and fintech, or education and fintech, we're seeing really interesting and exciting ideas emerge. But that puts us, to your point, a little bit in a position where we can't just be fintech experts. We also need to understand a bit about health or education or, agriculture, and how do you kind of know what you know, but also understand enough about those other sectors and spaces. And again, that's where we are doing the research. We're doing the understanding to build an investment thesis in that space. We're not going into it without our own formulated hypothesis of what we think matters and what will make, have a real impact in that space. And it's also where we look for the right partners. We're looking to co-invest with people who understand and complement us and the skills that we bring. So it's a little bit about making sure we're educated ourselves as these new innovative ideas emerge, and also finding the right set of partners that we can make investments alongside with.
So can you name some of these allied sectors, maybe health or something else, where you're seeing a lot of traction?
Yeah, so particularly in agriculture, I would say we're seeing a lot of incredible models, and we've made a number of investments. So in India, for example, we invested in a company called Agrim that has now raised a bit of capital, quite a bit of capital, and they provide kind of a marketplace for inputs for agri retailers across India. So it's a place where, and if you're in a shop selling agricultural inputs, you can go on, in one stop, find the inputs you need for your shop, and then actually now get financing for it as well. So a really powerful model that's doing quite well. And for us, we again see a massive need for financial services in the entire agricultural value chain. Another model in this space is Aqua Exchange, also in India, a company that is providing a technology platform and soon financing for shrimp farmers and fish farmers in India. A really powerful model. And again, going back to this verticalization, they've built a technology that gives a lot more clarity around data and provides a way for these farmers to better monitor their farms. And then on top of that, they can provide financing to those farmers. Data. So again, we don't know aquaculture, but we know the financing models that they're working on. And so we can help build off of what we know, and in the process learn a lot more about a field of agriculture we haven't invested in before.
So one of the things I read about you is you saying that you first realize your passion about solving real business problems for underserved communities. Can you tell us a little bit about how that happened, and how did you then further drive it?
My background has been entirely in sort of financial inclusion and fintech. And it started in the early days in Bangladesh and in India, working in microfinance. And again, seeing that, the way in which we can help people get the financial tools and financial services they need is by figuring out scalable ways to actually reach them. And that's what led me down a path of working in consulting, working at McKinsey in financial services, working for a number of different fintech companies around the world, in Kenya and India, and finding ways in which you can leverage business, leverage, the lessons of scaling quickly to reach underserved communities. So I think it's been a really powerful journey, again, of seeing the impact we want to have, but reaching that impact through business.
Okay, that sounds good. So that's quite the opposite of the earlier way of thinking of throwing money at the problem. I throw $1 billion, maybe I will solve this problem. But you've gone through step by step, through a search, through a discovery, and maybe applied it in practice and seen the results. So that sounds good.
Yeah, exactly. I mean, going back to the question around sustainability, I think that applies for this as well. I mean, if we have to keep throwing billions of dollars at problems to try and solve them, one day it's going to be hard to keep up with it. But if we can find sustainable ways of putting capital into entrepreneurs and fintech companies that are solving these problems, ideally also in a way that scales and reaches profitability, I think we're all going to be better off in solving these big challenges.
A lot of government organizations and government bodies are trying to attract fintechs, and that's happening all over the world. Is there something that you leverage that phenomenon for driving your organization's footprint or understanding or partnership? Do you work with government organizations in some way?
Yeah, you're absolutely right. Many governments have set up, either they've put money into quasi-governmental funding vehicles, or they've set up sandboxes for fintech companies, or they're looking for ways in general to collaborate with investors to understand what's going on in the market. So yes, we've done all of that, whether it's, supporting, mentoring companies that are going through sandboxes and through, accelerators operated by quasi-government entities, or we're just providing our guidance and our feedback on new regulation or on, certain models that we're seeing, innovations we're seeing in the market. We've found, increasingly regulators are more and more proactive, more and more responsive about these things, and looking for ways to encourage innovation in fintech while maintaining the protections and the discipline that's needed to make sure these are responsible financial products.
That's great. Thank you so much. Thank you for talking to Banking Frontiers.
Thank you. Appreciate it.